Hi there, welcome to Grain TV. It is Friday, February 24th, and a mixed day in the markets. Let's take a look at Grain Hedges trading platform and see where we closed. In Chicago, corn losing 1 cent a bushel, closing just around $3.65. Beans in Chicago gaining 2.5, and wheat losing 7. Today was March options expiration, so that had quite a bit of activity, especially going into the close. Corn was down around 362, looking like it was going to make a run at the 360 strike, but it ended up closing around the 365 mark. Wheat, on the other hand, was not able to sort of post any sort of significant rally, closing around 430 on the strike. So really today was just kind of a consolidation day. We did see beans correct a little bit after 5 days of heavy selling going into the weekend. On next week we'll see first notice day on those March contracts coming on Tuesday, so we'll see some position squaring ahead of that first notice day on Tuesday, especially in Monday's trade. Let's talk about some of the news that came out today. First of all, let's talk about weekly export sales, postponed because of the holiday on Monday, but today's numbers were not particularly enlightening for either corn or soybeans, with corn and beans coming in below expectations, not only on old crop but on new crop as well. Wheat was the only thing that had any sort of decent volume. New crop sales were 256,000 versus only 0 to 50,000 expected, and old crop wheat coming in at a respectable 451, right in the middle of expectations. Other news out today, this was day 2 of the USDA's Ag Outlook Forum. If you'll recall, yesterday they gave us a preview of what they think will be happening to 2017 planted acres. In that report yesterday, they said that corn acres would be down 4 million, bean acres would be up 4.7, and wheat acres would also be off 4. Let's take a look at what they said for carryout projections for the coming year. And these were somewhat surprising on several accounts. Let's start first with corn. Even though USDA pegged corn acres to be off 4 million from last year, they show very little change, only 105 million bushel drop in carryout projections, and only a dime higher in the U.S. average corn price. And part of that is a reflection of better, more normal yields. Last year's yield being exceptionally high, being a record high, they are expecting a much lower yield at more normal levels. Whether that's true or not will be left to be determined, but they didn't boost demand numbers as much as you might expect as well. So overall, that left their carryout projection only modestly lower from last year. In beans, a similar situation here, where they lowered their yield forecast even though they had a 4.7 million acre increase in soybean plantings for the year, and that kept soybean carryout the same as last year. Most analysts don't think that's the case, that we will see higher carryout for soybeans in the coming marketing year, some calling for 500 to 600 million bushel carryout versus 420 this year. In wheat, here's where we do see the effects of lower acreage. Certainly, yield will come into play here. Last year was a very good yield year in wheat, but even so, wheat carryout is expected to drop to 905 million bushels versus 1.1 billion today. Now, that's not necessarily a bullish number, but when you factor in several things, one, that spring wheat plantings might be lower than what USDA has factored in, so wheat acres could actually be lower in that March 31st report than what USDA has pegged as of now. Secondly, you've got some dryness in the plains that is lingering. You've got hot weather throughout much of the Corn Belt area, and so wheat areas are getting a little parched. Even up in Indiana, we've been talking to growers up there where they're saying it's getting fairly dry. Maybe not a concern at this juncture, but it is something to watch as we move forward. Let's take a look at the action in November soybeans today. We did manage to touch down around the $10 mark. We talked about this yesterday on the chart from the Grain Edge trading platform, that we were around that 100-day moving average and that nice even number of $10 a bushel. We did trade down to it today, but managed to bounce off of it going into the close with a little bit of a bounce at the end of trading, closing around 10.05. But watch for that mark next week, I'm concerned that the trade is looking for bigger and bigger soybean crop out of South America. The weather situation looks positive for their harvest in Brazil, so I don't see much to really sort of stem the tide of selling that we've started in the last few weeks. So watch that $10 mark next week on November beans. It might prove critical, especially with the funds so very, very long heading into this weekend. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain trading situation, visit us online at grainhedge.com. Take a free demo of our trading platform. Get our morning comments and technical alerts every day in your email inbox. Have a great weekend. We'll talk to you on Monday.